welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus will be on PNB Housing Finance's Q2 performance. Remember, it's been a robust quarter for the Housing Finance Company. We've seen a 5.6% increase in the top line revenue, a remarkable 22.6% rise in the profit over year-on-year basis. We've also seen that the operational efficiency has also improved for the company on a year-on-year basis. It has increased by 27.3% on a year-on-year basis, indicating that the rising costs that the company has been able to address as well. What we've also seen is that the operating income has also marked a positive trajectory, up by about 4.4% from the last quarter onwards and 10.2% on a year-on-year basis as well. That also is looking at an enhancing of the core operational performance for the company as well. Let's now welcome the guest on the show to speak to us about the key insights from the earnings as well as an outlook going forward from here. Mr. Girish Kousgi, the MD and the CEO of PNB Housing Finance, is now joining in on the show with us. Warm welcome to you, sir, and thank you so much for taking the time out for this discussion. Well, first up, congratulations, strong set of earnings coming in for you, and here's also wishing you season's greetings ahead of upcoming Diwali as well. Diving straight right in, help us understand what are the key factors that have supported in this quarter and what's the outlook for the second half of this year, sir, now.
Well, good morning, Sakshi, and happy Diwali to you and your colleagues. It was a very good quarter. So we have first on growth on retail, we have shown growth of 16.2%. This is against guidance of 17%. If you look at last quarter, it was 14.4, and last year it was 14.1, and last to last year was 10%. So in last 2.5 years, we really worked on retail, and the growth is now back. We are at 16.2. And if you look at PAT, the growth is 23%. If you look at disbursements, we have shown growth of 28% YOY. I think overall it's a very good quarter. Margins are stable. NPA has come down. The skew towards affordable and emerging, which gives us a higher yield, has taken off very well. We have crossed 3,000 crores in affordable book. Emerging book is now 12,500. I think it's trending very, very well. Good on growth. Book has grown. Disbursements have grown. Margin stable. PAT is growing. ROA is now 2.54. I think overall it's a fantastic quarter, and we look forward for a great quarter in the next couple of quarters. That's quarter 3 and quarter 4 of the financial year.
Okay, sir. Help me understand as far as the NII is concerned, sir. What is the kind of trajectory that you expect on NII? It's been about 1.2% odd growth on a year-on-year basis this time around. Do you see levers further ahead to see it further upgrading from here on? And also on the margins front, sir, what is the expectation?
So if you look at our corporate book, which used to be almost about 18,000 crores, since we had stress on the corporate book, we had stopped doing business. So the impact on NI and revenue is largely because of corporate. If you look at retail, retail is doing extremely well.
Yeah.
Now, corporate book, we ran down the book, now it is down to 1,500 crores. And the NPA also, which was 23%, now it is zero. So I think going forward, we should see NI going up, revenue going up, and we plan to start corporate in 2 to 3 months' time. I think even corporate business should aid us on the growth and also on the revenue and profitability. In terms
Okay.
of margin, we have guided 3.5%. I think for last few quarters, it's in the range of 3.6 to 3.65, 3.68. We'll be able to maintain margin between 3.6 to 3.65 for next 2 3 quarters time, and after that we should see NIMs going up.
Okay, so you did say how retail is actually a very strong performer. We've actually seen strong growth on that front. Any specific segments that are driving this retail growth going forward also? Where do you see the outperformance coming in from? And like you pointed out, your guidance of 17%, are you looking forward to beating that in FY25?
If you look at the entire retail segment, there are 4 segments: super prime, prime, emerging, and affordable. We focus on 3 segments, that is prime, emerging, and affordable. All the 3 are doing very well. Affordable, if you look at the book YOY, we've grown by 300%. And if you look at emerging, it is 23%. And prime is about 11%. If you look at disbursements, affordable YOY growth is 68%. And on emerging, it's about 31%. and prime is 22%. So all the segments are doing well, but our focus is more on affordable and emerging, simply because these two would come at a higher yield. Prime is a large segment for us, and we would be focused on prime, but it will be more of a balancing number. Today, our book is about 68,000 crores on the retail side. Our plan is to take it up to 1 lakh crore by FY27. If you look at the mix between segments within retail in FY27, affordable will be 15,000 crores, emerging will be 25,000 crores, and the balance 60,000 crores will be prime. So our focus is on all the three segments, but a little bit more on affordable and emerging because of the
Okay.
margins.
Okay. And in terms of geographical growth, sir, are you seeing some stronger demand from metros? And how is it in tier 2, tier 3 cities and the rural areas as well?
We are seeing demand across, metros, tier one, tier two, tier three. It is more of a segmental approach. For us, affordable, we do more business in tier one, tier two, and tier three, and tier four. In terms of emerging, a focus is largely on tier one and two. In terms of prime, it is metro top cities and part of tier one. In terms of geography, south is trending very well for us. I think south, we are close to about 38% in the mix, followed by north, which is 33, and west is little less than 30%.
Okay. Sir, talk to us about the festive demand so far. We have been in the midst of this peak festive season. During Navratris, your peak days, what has the demand been, and any impact of that already being seen on the loan disbursements?
So if you look at the market, I think demand is quite robust, since last couple of years. Number two, with festive season, coming in, I think demand will further go up. And number three, PMAY ISS interest subsidy scheme, I think that will be a big boost to increase in demand, because that will be close to 1 crore customers will get the benefit of subsidy in next 5 years, which means every year it's about 20 lakh customers, which is huge. And it's going to help all the housing finance companies, predominantly focusing on affordable and emerging. So it's going to be really very good. Next 3 to 4 years, we see, very good demand in the space.
Okay. So also help us understand on the rate cut expectations, what is it that you personally have? We've already seen rate cuts start globally, especially in the US now. All eyes will be on RBI. Do you really see rate cuts coming in this year, or will it be pushed to next year? And what are the kind of expectations that you would have on the benefit that would have on the demand for home loans going forward, sir?
So definitely rate cut is going to happen. It might happen in this financial year, maybe in quarter four, and it might continue for a few more quarters. So it is going to aid us in terms of growth. However, on the margins, we are insulated because we are increasing our share of origination from affordable and emerging. So I think long run rate cut is going to definitely help. And for us, even in the short term, it's going to help us. And
Right.
there'll be some lag effect, I think, which we will be able to manage.
Okay. So also lastly, I want to understand with the PMAY interest subsidy scheme expected to benefit close to 1 crore customers over the next 4 or 5 years, how well are you positioning yourself to capture this opportunity and to increase your market share now?
We are geared up today. We have 303 branches. In next 3 years, by FY27, we'll be adding another 200 branches. So we'll get to 500 branches by FY27. As of now, all the 303 branches are geared up to do no schemes under PMAY. So we are geared up, and it's going to help us on all the three, starting from affordable, emerging, and prime. It will be less in prime, more in affordable and emerging, but we are geared up.
Okay, well, thank you so much, Mr. Kousgi, for being with us on this special edition to share with us the insights from your quarterly earnings. I wish you all the best for the upcoming quarters too. And thank you so much. I truly appreciate your time always on Business Today Television. And here's once again wishing from the entire team of Business Today Television that you have a fantastic Diwali ahead, sir.
Thank you so much, and wish you the same.
Thank you so much. With that, viewers, we wrap up this very special earnings edition. I hope that you've got some clarity as to which way the management is looking forward to driving the company going forward from here, the key factors that are supporting the sentiments as well as the earnings at this point in time, and the way forward from here on for the housing finance company. Do stay tuned. We will be continuing to get you all the exciting conversations around earnings as well as festivities through the course of the day. So stay tuned. Don't go anywhere.
Good morning, ladies and gentlemen. This is our special episode on how quarterly earnings for the second quarter are panning out. And we are joined by the management of Pidilite Industries, one of the finest brands that is